All right, everybody, it is me, Gregory Mannarino. It is Thursday, September 16th, 2021, and here we go again. Let's start off with the big report this morning on first-time unemployment claims for last week. Every Thursday we get this, and every single Thursday, for as far back as you want to look right now, it has been abysmal. And I'm laughing, but it's very sad. Today is no different. So here's the numbers. Another 332,000 people applied for first-time unemployment benefits last week. This is higher than the estimate. You know, these rocket scientist economists who always get it wrong. They estimated 321,000 would file. Well, we kind of blew that number away. And it's not going to stop. Again, you know the mechanism here. The economy is contracting. It's contracting, and it will contract further moving forward. Now, I guess if you want to call this a bit of good news, what do we know is going on here? The U.S. consumer is broke, okay? They continue to borrow beyond their eyeballs. Just to make ends meet. However, retail sales got a slight bump last month. Okay, people are hurting. I mean, come on. This is just insane here with real wages declining precipitously with this massively inflationary environment here. So what's the takeaway here? Nothing, in my opinion. This little bump here with regard to retail sales. Anyway, let's look over here at the market. Right now, people, gold and silver are taking a hit right now, especially silver down like 3%. The dollar is markedly stronger this morning. 10-year yield stable, so there's no fear trade here. Crude oil remains above $72 a barrel. However, it's under a slight amount of pressure. Well, that's the setup for this morning here. Look, you know my stance on this, and I'm just going to cover it again real quick. This period of time in the year where we are right now is volatile, and drops in any asset, people, in any asset moving forward, except the dollar. If you want to call a unit of debt an asset, I don't consider a unit of debt an asset. If you're in the dollar, okay, you're out of your mind in this environment. You got to convert those dollars into something. Even if you, like I've been covering for you, if you have dollars in a high yield savings account, you're still getting destroyed. You're losing purchasing power every single day. You have that cash sitting, even in a high yield savings account. This is the environment. It's deliberate. It's an engineered environment of risk, meaning cash flows into the stock market. You know, why do you think, for example, and I covered this before, the Fed has chosen to rig the largest part of the market, the debt market as a whole, okay, including the dollar. Okay, that's what they've done here. By the Fed artificially suppressing rates, well, what does that do? It forces cash into the stock market. Henceforth, you get a bubble. As a matter of fact, it causes massive distortions across the spectrum of asset classes. Cash going into things it shouldn't be going into, coming out of things it should be going into. You understand? It's out of control. But that mechanism is going to remain. And it's going to remain further, in my view, as long as the game remains risk on and as long as the bad economic news keeps coming. And it's not going to stop as the economy contracts. I don't think we've seen anything yet with regard to the contraction of the economy. Again, our debt to GDP ratio is astronomical, and it will continue that way moving forward. I don't know what these people here on the mainstream media outlets I mean, they're cheerleaders and they're reading a script. We all know that. Period, the end. But they won't tell people the key things that are occurring. Again, it's an environment of lies, fakery, and propaganda. And you will be propagandized. You will be lied to. That's just the mechanism here, how the public gets pulled into every direction except the correct one. I mean, let's look at another aspect of what's going on. How many of you watch TV commercials? You watch these TV commercials, and I look at these things and the characters, the way people are being portrayed. It's creating an environment of failure. Period. The end. That's really what it's doing here. And it's all part of the mechanism, in my view, how people's minds are being twisted. Children, especially the young people, they're being fed or programmed. Henceforth, why these are, these commercials are actually mini programs, portraying people in a particular light. And you're going to see more of that. Again, they got to hit those young people and have them sit there and stare at those screens so they can be mind twisted into a total mentality of failure. Okay, this is part of the two-tier society that's being created that I've outlined for you for the longest time. And it goes way beyond TV commercials and everything else. It's astonishing to me, really, and this is how societies, collapse. Morally, intellectually, and everything else you can possibly think about. But it's all part of the game. It's all part of the game, creating winners and losers. And you are a winner if you're following this blog. So again here, in summary, we get yet another piece of bad economic news with regard to first-time unemployment claims, a slight bump higher with regard to retail sales. And watch how they're going to play this on the mainstream media. They're going to use this as a major distraction. Look at this. Look at retail sales. They're higher. But what they're not telling you is people are borrowing beyond their eyeballs here to acquire things. And the environment is horrible. Inflationary pressures are going to get much, much greater moving forward. People are going to have to borrow more as real wages and real incomes, plunge. But that's the way it's going to go here moving forward, people. And you and I must remain steadfast, period, the end. We know what to do. We know why we're doing it. Buy all the dips with regard to the stock market, with regard to cryptocurrencies, for example, which right now are holding their own. Gold and silver, like I said, taking a pretty big hit. What does that mean to me? It means they're going on sale. Because the debt hyper bubble is not even close to hyperinflating. And again, as long as that 10-year yield remains stable, and it is stable right now, we buy the dips. Forget about staring at the stock market and trying to figure out what it's going to do. You have to look at the drivers. I always tell you that. And the drivers right now, 10-year yield number one, or the debt market as a whole. The dollar, or the Dixie index right now, like I said, is higher. This is the relative value of the dollar. The market likes it lower, okay? Crude oil being propped up. We're now above $72 a barrel. We're going higher, no doubt about that. And it's Fed's balance sheet, which the Fed's not done buying assets by a long shot. They're going to continue to buy assets from here till eternity. And they have no intention whatsoever of stopping it. All right, with that said, people, you know the deal. You know what's going on this morning. And I will see all of you at the end of the day. We'll sum this all up. And it's going to be just freaking lovely as usual. See you later.